Hi, welcome, 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 everyone. We're so happy you are here today. We have a great speaker. He's been a friend of mine for, I'd say, 20 years or so, maybe longer, who knows. And if you don't know what we do, we work with sponsors like Danny, who's going to present today, for you who are the limited partner and would like your money working in cash flow of some sort in some sort of commercial asset around the United States. So that, and I picked this particular quote because this is all about success. And my friend Danny is a very successful sponsor. This is by Ann Landers. If any of you can remember Ann Landers, it's not what you do for your children, but what you have taught them to do for themselves that will make them successful human beings. So that's exciting. And Danny and I had a nice conversation about children yesterday, so I thought that was really appropriate. So we are so excited because today we have Danny Flores, who is the principal of Prime Capital Investments and other different entities with in the real estate arena. Prime Capital Investments acquires from heavy duty to light value add multifamily projects around the United States, actually. And Danny spent 16 years in the building industry, from building single family homes to heavy construction, building roadways and waterways. Can't think of too many things that are that much heavier. Anyway, and Danny also has a Bachelor of Science from University of Southern California, or as we know it as USC, and he was a business administrator major with general financial management, which is what makes him an expert in the area of doing multifamily and giving good returns to the investors. So thank you very much for being here today, Danny. May I present Danny Flores to you? And Danny, take it away.
Thank you so much for that introduction, Peggy. I like your quote because now I can tell my children that when they start asking me for money, my four boys actually, so that everyone knows. But either way, okay, perfect. So I wanted to present and talk about this new project that we have under contract in the city of Tucson. It's a 38 unit value add multifamily project. It came to us off market. Basically, the backstory of it is that the current owner he's an elderly man and was having a hard time keeping the project under control. And then his wife gets hurt. And then he says, I can't do both. I have to take care of my wife. So I'm going to decide to sell a building. Lucky enough for us, we get the call from the broker, says, do you want this project? Totally off market. We looked at it, we wrote it, and he said, yes, we'll take it. So I'll tell you a little bit about the project so you know why we like it and why we're pursuing it. And then you can see what the potential opportunities are here. So it is 38 units built in 1973. We're picking it up for $6,070,000. It does have current financing that's assumable, which is what we're doing. There's a 53% LTC on it at 3.45%, fixed rate till 2030. So we have a 7-year run on that. What we're doing is we're raising a combination of some pref equity and common equity. You can see the classes of shares that we're offering, which will show it a little bit better on a table in a few slides.
Danny, are you sharing?
Oh, you know what? I have not shared. Let me do that. Sorry about that.
We figured you were going to tell the story and then start sharing. So
Okay,
however it
I should have
works.
shared at the same time. Okay, got it. So let me go back. Okay, so here's a project. Here's the address, my title slide. Here's my second one that I talked about. Once again, 1973, $6 million acquisition price. You can see one picture of the building, and you can see the location, the map location. Then, okay, so here's a little bit more details. It's a combination of 5 different buildings. Average rents are a little bit over $1,000, and all the units have been completely renovated. In 2020, ownership emptied out the building and renovated all the units, put all new cabinets, countertops, appliances, flooring, night fixtures, etc. All completely new. The outside of the building is very clean. The decks are actually lightweight concrete, and they're not wood, so that keeps there's no maintenance to that. The current the laundry room that they had, because they installed the washers and dryers in the units, was converted to a gym. So it's one of the smaller buildings in Tucson that actually has a gym, and there's plenty of parking around the building. I think it's almost 2 for 1 on the parking ratio. There's 9 one-bedroom units. There's 29 two-bedroom units, and a pretty good size, 690 square feet for the one bedrooms, 830 square feet for the 2 bedrooms. You can see that where the rents are, but the current rents are about $150 below market, which is one part of the value add deal that we're going to fix.
Camera off so they can't see it working.
Can you see, Ted?
Fred.
Okay. So here's basically another breakdown of the shares, the classes of shares that we're offering. We are very experienced in the Tucson and Arizona market. This is deal 8 that we buy in the Arizona market, and this is actually deal 6 specifically in Tucson. In 2022, we actually had 3 deals go full cycle that we exited out of, and we're able to get about 2 times for our investors, equity multiple. And we did it in about 2.5 years. I don't know if we can replicate the same speed in the current market, but nevertheless, all our projections are based on 5 to 7 year hold. But if the market gives us an opportunity to exit sooner, then we will take it. We like the market. It's very stable. There isn't a lot of new products coming out there. There are many companies, including the university, that provides employment for the area. We are picking up the building at about $160,000 a unit. Recently, the same broker had another deal that he had to go out to market to sell 33 units. So this is a tiny bit smaller than this one. 33 units that were not renovated. Only 6 of them were renovated. And not as a favorable unit mix. They had, out of those 33, I think 8 of them are singles with 1s and 2s. And it ended up selling for the same $160,000 per unit as we're buying this one. So that one sold for $160,000 a unit, non-renovated, whereas this one has a better unit mix and is already renovated. So you can see that we're buying it at a good basis just because we're able to get it off market. Once again, we have great financing because we're doing the assumption there, and we don't have to do any renovations. It's more of an operational play that we're fixing. And here's pictures of it. You can see the top 2 pictures towards the left are the exterior pictures. You can see the pool. You can see the gym on the right side, and then the bottom row shows what the interiors look like. Once again, based on our experience in the market, we like the deal because it's operational play. They don't have to do heavy renovations on this one. And we're getting very favorable financing on it because we're able to do a loan assumption, which is great in today's market since the rates are so much higher than what we're getting in that. Here's a little bit more. It's kind of a regurgitation of what we had. Commitments on this first come, first serve. You can see the capital breakdown. Once again, the senior loan, it is a Fannie Mae assumption. And we had a 5 to 7 year hold on this one. Here's a table of the classes of shares that we're offering. Yeah, Class A at 50,000 minimum, and it is basically a straight 12%, 6% current pay, 6% will accrue, and when we have a capital event, which would be a refi or a sale, any accrued portion of that hasn't been paid, it's paid out along with the principal capital. We have Class B at 75,000. That's an 8 for a 70-30 split. Once we hit a 15% IRR on that, the split changes to 60-40. Then the next three classes are a combination of 500,000, million, million and a half. The pref is 9%, so it's slightly higher, better economics on these. And the splits also change depending on the size of the investment, from 80-20 LPGP split, 85-15, and anybody bringing in a larger amount, it's a 90-10 split. No second for those any of those. And this is kind of an illustration of what $100,000 invested Class B shares would look like. Basically, it ends up being a 2.47 times equity multiple with an average of 7.5 cash on cash, and over a 15% IRR based on a 5 to 7 year hold. Here's the location of the building on an aerial map. You can see what's around it, and it's also in a really good neighborhood of Tucson as well. Here's a slide that shows in greater detail our sources and uses at the top of it. We are raising 3.6 million on it. We've already raised and only need about 1.8 left is what we have left on this raise. And then you can also see our business plan, what we plan on doing as far as increasing rents and controlling expenses. This slide will be available after the presentation. So I'm not going to go through it in detail, but you can at your own time. And our rent comps. Red marks the spot of the subject. The gray boxes show the location of the rent comps that we're showing you. We have on the left side, on this one, Wasko, we're projecting 1,095 plus utility bill back on the ones and 1,295 on the twos. Casa Presidio, the center slide, is 2 buildings away from ours. They're already exceeding what we're projecting, both for the 1 bedrooms and the 2 bedrooms. And the current management company that manages that one will also be doing our management on this. We have Beverly on Fifth on the right side, achieving exactly, well, actually now it's but about $25 above that. So we're confident we can get at least 1,095. The current management company there has told us that they think they can get more, but they haven't proven it to us because they haven't had vacancies. So we can't confirm that, but awesome. And then here's another 2 more deals that are achieving what the 2 bedrooms are getting or surpassing it actually, and what the 1 bedroom they're getting. Sales comps, once again, red marks the spot. The back ones are the buildings that we comped out. I would try to pick comps that are close to comparing apples to apples. Here we have our building on the left side. Actual price is $159 for what's $160,000 per door. The Sonoran sold for $182 a door, and Hallmark sold for $192 a door. And keep in mind also the other building that just sold for the same unit price that's not here, for the same price, not renovated. So you have to add, they're paying $160,000 a door. If you add another 25,000, and they're adding washers and dryers, so probably closer to 25,000 per unit. You can kind of see that their actual price is about $185,000 a door. where ours is already at 160 and it's already renovated. And here are two more comps, once again from 181,000, and then you have the Bellevue Towers at 155. There's a little bit on the market. You can see some of the employers that are there. This unemployment rate in Tucson is a little bit over like a 4.1%. Keeps us very comfortable that everybody's working. There's no lack of employment. Said if their tenants have a place to work, then they have the ability to pay the rents as well. And Tucson currently has positive rent growth of over 3%, whereas Phoenix has negative rent growth. Rents have been compressed a little bit in the Phoenix market, but not in Tucson. Reason being is that there's not a lot of new supply coming onto the market, and Tucson, it doesn't make sense for builders to build just yet because of the cost versus the rents that they get. So yeah, vacancy is about 8% vacancy rate there. You can see the rent growth. We do have other deals there, and one of them that's not on the lease up stage is basically like the 95% filled in occupancy. So there's not a problem, and especially this building, it's in a really good area, and it's a really nice building. So they don't have any issues in getting it leased up, so we're comfortable with that. A little bit more market fundamentals. Household income continues to increase, and population also continues to increase in that market, which helps us stay comfortable with being operating in that area. This one kind of shows that actually the center column shows there's only about 100 new units coming that came to market last year, and there's very little construction right in the area where we're at, which is central Tucson, which kind of keeps competition away from new product coming online and stabilizes the current prices of the current units. Part will be our property management company. They're a smaller company. We can't use a large company on a smaller building. They just don't work as well. So it's the smaller regional companies that actually operate really well with smaller buildings. One happens to be really good at keeping their units or their buildings close to 100% occupancy. And they do that with the marketing efforts that they do, and as well as having good team members that are really good on the follow-up, and that just basically helps the building stay pretty much occupied. Here's some of our team members, myself being principal of the company. Crystal will have as a CFO, and then Jake is a director of acquisitions. We keep our pipeline filled. And this one's just an illustration of a building that we actually currently have in Tempe. This was 88 units that we bought in 2021. We went through and renovated all the units, adding washers and dryers, and they were fully permitted. We did that renovation in about 12 months from acquisition date. And then because we were doing such a good job, we actually got nominated for the Tribute Awards. There were 3 buildings that were nominated. Unfortunately, we didn't win, but we thought it was a great idea to be noticed and to get nominated for those awards. And you can tell that on this one, we were able to increase within a year revenue by 75%. And by being able to control expenses, we were able to grow the NOI in this building by 108% in a 12-month period. This is another building that we have in Phoenix. This is 150 units that we sourced off market as well. We are currently on month 14 of that building since we purchased it. and we've renovated about 85% of the building. All new interiors, new cabinets, no washers and dryers in this one, but new paint, new flooring, stainless steel appliances, light fixtures. We painted the outside, we rebranded all the signage, remodeled the pool. So all in, will be done with this building in about 16 months from date of acquisition. And we are almost fully occupied. We're like in the mid-80s right now. We have on the last two batches, we have two batches left for about 21 minutes. Once we're done, half of those are pre-leased already, and we're hoping to have everything at least at a 95% occupancy right around March or April of this month. This one was also nominated for the Tribute Awards, but once again, we didn't win last year. And then this is just basically disclosures that our business plan are all forward-looking statements with projections, but the projections based on our experience and the current market conditions. And they're not guaranteed, but we always hope that we can actually meet our projections. And this basically says that official offering for this deal is done through a private placement memorandum, which is on our website and on the deal room. And basically, that's how we will be doing the offering. Here's my contact information if you have any questions and direct. And then the link also takes you to the investor portal. If you want to get more details, we have all the documents there. Private placement memorandum, our operating agreements for the entities, and basically these slides as well. Thank you for attending. I'm gonna switch it back to you, Peggy.
Yeah, thank you for presenting. It was great. I have some questions. Let me see if anybody else has some questions. Because you know me, I always have questions.
That's good.
Always. Well, I'm just curious about, I had only ever did one or two of these in my lifetime, and I just found them just, no offense, just way too much work. I don't want to babysit people. Thank you very much. And I don't want to take care of the problems that they create on the property and then have to keep fixing for them, even though the property manager's been told not to fix their stuff. So property management to me is really important, getting the right people. Yeah, one was, well, I have like 3 or 4 questions. You have this other property, you still have some vacancy on it. You've been in the Tucson for like 20 years now, right? Or something close to that, would you say?
No, not that much. Probably about 4 years, actually.
4?
Yeah, about 4 years. Well, I've been buying multifamily for over 20 years, but not always in Arizona. I started out in California, stayed in here long. California is just too difficult to operate. So I actually sold my last building in California about 4 months ago. And don't really look to buy any more out here. It's just too hard with all the bureaucracy. They give away too much to the tenants. They restrict the landlords too much, but then they want you to fix things. You can't raise rents. Insurance goes up. Maintenance goes up. So it's just like, don't want to deal with that.
Okay. For some reason, I thought you'd been, because you were there pre-COVID, and I know you had
Correct.
a couple of different buildings and you were adding value to them. Okay. So have you had any struggles throughout this time?
We were able to maintain pretty good during COVID. We didn't have issues with tenants not paying us. Aside from the one-offs, sometimes you do have people to struggle, but it hasn't affected like basically our operations. You're always going to have somebody that doesn't pay rent, and you're probably always going to be doing evictions. As long as you're not doing 20 evictions at once, then you're okay, right? The one-offs during COVID, Pima County, they did have help for tenants, and so we did get paid through them. but overall, not too much. I can't complain about any struggles out there.
Okay, great. Thank you. And
Yeah.
then you're raising rents on what you have. And you said you're not sure that the manager could get what they thought. So are you planning to raise it all up to like the 1095?
150?
You're gonna raise
Yes.
it up $150?
Yes. So what we're going to do as the leases expire. So we can't raise it all once we close escrow on it because the ones that are on leases, we have to
Mhm.
wait for them to expire. We did ask the current management not to do any more long-term leases unless they hit the numbers we want. And they basically came back to us and said, well, we think we can do a little bit better. And we're like, okay, if you can do better, you can do 12-month leases on them. But if you can't, give them short-term leases so we have the flexibility to move the rents once we do the acquisition. So basically we'll go in there, we'll raise what we can, and then as leases expire, we'll continue raising the other ones.
And if they don't pay that extra money, will you uh not ask as much or?
No, if we're confident we can get what we want. And the thing is that we're keeping them just a tad bit under market, and you have to remember we put this deal in the contract about 3 months ago. So a lot of times what happens, especially in Tucson that still has positive rent growth, going in there, the rents might actually be a little bit higher. So if we can beat our pro forma, we will. If we can match it, is where we want to be.
Okay.
And it's just basically knowing what the current market is doing and understanding allows us to move the rents and still be comfortable doing it.
Thank you. Oh, Chuck, thanks for joining us. You're muted, Chuck.
Hi, Peggy, are you talking to Clarence?
I'm sorry, Clarence. My
It's all right,
apologies.
not a problem, not a worry. I just didn't want to jump in somebody else's spot.
No. Yes, you're up, Clarence. Thank you.
Thank you. I wanted to ask what cap rate you are currently, what is the current cap rate based on the purchase price and the current operations?
About a 4.7 cap rate on the current rents.
And what are you projecting the cap rate to be after your adjustments?
We'll get to a yield on cost of about 6.3 once we're stabilized.
Okay, 6.3. What does it cost to build if you have the land? Well, what's it costing to build an 830 square foot apartment now in Tucson?
You know what? We're not builders, so I couldn't tell you what it would cost. Just so that you know, the rents in Tucson are lower than they are in Phoenix. And that's kind of a barrier to entry for the builders to go out and mass produce in Tucson like they're doing in Phoenix because they can't get enough rents and it doesn't pencil out enough for them. Especially now that the interest rates are so much higher. There's definitely a slowdown even in Phoenix of new permits.
Well, you said Phoenix had negative rent growth, correct?
That is correct, yes.
Do you know what a similar 2-bedroom would rent for in Phoenix?
Phoenix probably about 1,600, depending on what area you're in. If you're doing, let's just say we can say the base in Phoenix is about 1,600 plus above that, whether it's a 2x1 or 2x2, do they have washers and dryers in the units? Have they been renovated? But basically you can say they're starting at about 1,600.
Okay. And your base here, I think you're saying is about 1,150.
Yes,
possibly
correct. Yeah.
Do you have any sources and uses of funds? I mean, what?
Yeah, we have it in one of the slides. It's there.
Okay, you didn't cover that, did you?
Yeah, we covered it.
You did?
You want to
Yes.
cover it again?
Yeah,
Let me see if I can
and maybe
bring
the
it
cap,
up.
yeah, I saw a brief capital stack, but it was very brief. And it's probably very important.
Does this one have rubs?
Uh, not currently. That's one of the things that we need to be able to implement into the
Yeah, so you're going to add rubs
correct.
at
Yes,
some point. Yeah.
correct. When we do the rental increases, that's when we'll add it.
Okay. So rubs, for everybody who doesn't know, is adding the utilities so that the tenants pay for the utilities and they get billed every month, and the management company collects that because it's not individually metered. Somehow it's metered, but it's not like everything runs to the, you don't have a, I'm not explaining this right. You
Oh,
don't
I
have,
can help you with that. Basically, what we do is we figure out what our utility costs are, about 80% of it. Water, sewer,
trash.
trash, right? And then 'cause we don't want to charge the whole thing. We can't make any money off of utilities. And then we just basically split it and kind of figure out whether the one bedrooms or the two bedrooms. And well, on this one, sometimes we use Service, which is a utility bill back company that actually uses a formula depending on how many people in the unit, depending on the square feet of the unit, depending on the usage. So the prices change every month. But smaller buildings like this, it works better just to do a flat rubs, with a 75%, $75, $65 a month. And so when somebody moves in, they know that the rent is X amount of dollars, plus rubs is another extra 50, 60, 70, $80, depending on the size of the unit.
Okay. So while he's looking that up, David, you have a question?
Yeah, hi Peggy. Can you hear me okay?
Yes. Thanks for joining us.
Yeah, good to see you. Yeah, Danny, I had a question in reference to increasing rents, as you mentioned, and the rubs. At what point are you thinking about increasing the rubs? And then how much would that be? And also how much would the increase of rents be as well? And then could the current tenants afford it?
Yeah, so the current rent increase will be about $150 on an average. You can see what did I tell you right now? So we're going up to $1,095 on the 1x1s, and we're going up to $1,295 on the 2x1s. If we can get a little bit higher, we'll do that. That's what the management company said that they can do, but we're projecting $1,095 and $1,295, so we want to be able to hit our projections going in. And like I said earlier, they're not all raised at the same time. They're going to be raised as the leases expire.
So has your team done the rent analysis as well based on the time of the year coming up? And I kind of missed the first part. I apologize. So I'm just curious because where I'm at, rents have kind of settled a little bit. So I'm just curious on your market if that makes sense, or you may have some pushback on that.
No, we're pretty confident knowing the market in that particular area of Tucson that we'll be able to hit that. It's a really nice area. They don't have any issues in getting any of the units rented. They actually, when they go out to market and rent a unit, they have plenty of traffic. So that makes us confident that we can do it. Plus, we're also hitting a cycle in the market, right around February, March, where things start picking up, because usually it slows down during Christmas. And one of the things that drives the pickup and people moving around is people get their tax returns and they get money. So we know that this is like a window of opportunity to be able to make everything happen. If somebody, there's no guarantees that nobody will move out. I've done this plenty of times, and I've raised rents on entire units on buildings that I've purchased that have all been month to month, and people sometimes get mad and say we're going to move out, but for the most part, maybe you'll get a couple that move out with my experience, but for the most part, everybody will pay because it's more expensive for them to move out. You know, they have to go out, they have to find another unit, they have to spend on moving fees, they have to put the deposit on the other unit, and they might not be able to afford that. At the end of the day, it might cost them less just to stay there and pay more rent than go try to rent somewhere else because the rent went up. I mean, the insurance goes up, maintenance goes up, everything goes up, so we have to increase the rents.
Did you find what you were looking for to share? Or
Yeah, I moved it because we're going back to the rent comps, but yes, let me put this up. All right, so here we have sources and uses that you were asking for.
And what did you ask exactly, Clarence?
Well, I'm wondering where all the fees are, what the acquisition fees are, what the ongoing management fees are, if there's a total asset management fee, things like that. I
Yeah,
don't know what they cost.
The property management fee is 5%, is what we're gonna pay the property manager. The asset management fee is going to be 2%.
Annually.
Well, it's billed monthly, 2% of gross income,
Yeah, right.
2% and 5%, uh-huh.
And then the acquisition fee, I see $303,000. Are there any brokers in this?
Any what?
Broker fees.
No, the broker's getting paid directly from the seller.
Okay, but there is an acquisition fee.
Correct, yes.
Okay. How much money are you guys as sponsors putting in this?
We have about 180,000 in the deal as of
That's
today.
it?
Yeah. Plus we're signing the loan guarantees.
You're still having to sign guarantees?
Yeah, it's with Fannie. They're bad boy carve-outs that we have to sign.
Okay. And then you had another question, right, Clarence?
I don't think so.
Okay.
Well, I mentioned the capital stack. I saw briefly a capital stack, and there was a whole lot of segmented returns based on how much.
Right here, we have the senior debt is about 3.2, pref equity about 1.9, and then common equity about 1.7. You're muted, Clarence.
The preferred equity is receiving a 12% return. Is that correct?
12%, with 6%, 6% pullback. Yes.
Okay, and then what are the rest of the equity investors receiving?
They are getting here. Let me put you
And
up.
8%. I think it was 8% preferred, right?
There's an 8 pref for 100,000 up to 100,000. 8 pref with a 70-30 split.
Okay.
Can you show that page again?
Yes, I can.
Yeah, I've sort of got a handle on it, but my question is, how are you on a property that's a yield to cost of 6.3%, and I understand you've got a very low paying first, right? Like
That's 3.45%, correct.
Okay, I'm just wondering how you're going to pay 8% preferreds, and if that's going to be a return of the invested capital, or if that's.
Yeah, so the eight pref is what the investors get paid prior to any splits. So that's basically kind of the senior piece of the common equity. Will give the investors 8%. I would imagine probably the first 6 months we won't have any distributions, but they're accumulated. So you'll get 8% pref. Then once we hit that and we've delivered that to the investors, then that's when we do the splits, the 70-30 splits or the other splits for the other shares. But
Okay,
the
so-
pref goes out first.
So there's no ongoing preferred return?
Yeah, it gets paid out quarterly, but it'll take us probably about 6 months to get everything up and running and get the property stabilized, this type of asset. So for the first 6 months, we may not give out any distributions, or if we do, it probably won't be the complete 8% till we get the property stabilized.
Okay, thank you.
Yeah, almost everybody has a holdback.
Yeah, because you have to have that opportunity to stabilize the property before it can start spinning off cash.
Yeah. I mean, it's one thing to read all the documents that the seller gives you. It's another once you're in it. Things change. Your property management changes. People might move out. Who knows? That's
Right.
why you need to go through the stabilization.
Mhm.
Jana.
Hey, Danny, congratulations on being nominated on that tribute award.
Thank you, Jana.
So do you have a closing date? Can you talk a little bit about the timing?
Yes, we have our official closing date is February 2nd, but we do have one 30-day extension to execute. But we are trying not to execute that. The seller wants to close, the broker's hoping to get it closed as well. We're very in tune of what the broker needs for his clients. And that's what keeps our relationship good with them and bringing in these off-market deals. So if we can close at the end of this month, we're gonna do it. Though lenders in place pretty much, they have everything they need. They're going to issue a letter of approval this week. So we're up right close to the finish line right now.
Excellent. And then I know Peggy has known you for a long time, but can you talk a little bit about your history in multifamily? How many doors have you cycled through, and what your current holding is?
I bought my first multifamily deal in year 2000 out here in California. That was I used my own money, saved $65,000, bought a fourplex. I ended up selling that fourplex a year later for about $100,000 profit. So I did exchanges probably for about the first 15 years, all in California, when California was a much more landlord-friendly market. Then I started syndicating. 2019, we worked our way up to about 2,200 doors. We're down to about close to 1,800 right now. We've gone full cycle on a total, I think it's 18 deals now. So we've been doing it a little bit. And then my construction background and my finance background kind of helped me navigate in this market pretty comfortably.
Excellent. Thank you.
You're welcome.
Is that it, Jana? Fred?
Thanks, Peggy. Danny, thanks for the presentation today. I had two questions. One, I noticed in the slide on the capital or on the sources and uses, the capital, I think, was $50,000, which to me seemed a little bit on the low side. I know in one of the slides it had mentioned about the building needing some improvement, curb appeal. I know it was renovated in 2020, but 50,000 still seemed a little low. Is there something I'm missing, or
No.
Can you explain that 50,000?
Yeah, so the capital budget, it's 50,000 that we're kind of saving for any deferred maintenance, but there really isn't any deferred maintenance in that building. They just recoated the roof with a 10-year warranty, so the roof is in good condition. The units, the interiors are renovated. We've walked all the units; they're all in good condition. The exterior of the building doesn't need any paint. It's clean. The decks are clean. The stairs are clean. The grounds are super clean. It's probably one of the cleanest buildings that I've seen in a long time. What we'll probably have to do in maybe within the year is maybe slurry coat and restripe the parking lot because it's asphalt. It's not in bad condition, but we like to do that to keep it in good condition. And other than that, we don't foresee anything else that we have to do. Yes, and so it's a capital budget of 50,000, but we're also getting we're keeping 185,000 in reserve. So when you combine the both, it's about 230,000. Not anticipating any real large expenses. We feel comfortable with that. We don't want to save too much cash if we don't have to.
Okay, so you're not planning to do any landscaping or anything to address that curb appeal issue that was mentioned?
No, I don't know. I don't think we mentioned curb appeal. I think the curb appeal is pretty good. The signage is pretty good. They do have some fake grass on the interior courtyard, so that looks bright and green. It's in good condition. So we don't foresee having to do anything right out of the gate, or in the near future.
Okay, maybe I misread one of the slides then.
Yeah,
okay.
maybe. The only thing is that and we're in the winter season in Tucson where it's not as hot as it usually gets. But we know that once the heat picks up, we'll have to change some ACs, and that's about $4,000 to $6,000 cost when we have to do those. They've changed a lot of them, but I couldn't tell you exactly how many they have changed because they didn't keep track. But those are the expenses that we'll probably see during the summer.
Okay, yeah, there's always surprises.
Oh yeah. And
okay,
we think those are the big ones right now.
Okay.
And don't forget they're putting the rubs in place after they raise the rents.
Mm-hmm.
My second question was, I was just curious, how long have you been out looking to fill the equity side? I mean,
we started with a 506B initially, and then when we switched it to a 506C, we also had to have the lender go through it. So it actually took us a little bit longer than the usual, but it takes us to get the documents. So we actually didn't get our 506C documents till the end of December. That's why we're a little bit kind of behind the curveball here, and trying to kind of make it happen by the end of the month.
Yeah, that's. I mean, I know Peggy's known you for a while, but for people who haven't done business with you, today's the 23rd. We're hearing about it 7 days before closing. That doesn't leave really any time for due diligence other than a quick read of the documents and you know. So
yeah, no, I get it. Sometimes, I mean, we've done a lot of deals, but you know, when you're working with a lender and everybody has to approve your operating agreements, and being during Christmas time where people are taking a week off, that just really bogged us down this time.
Right.
Yeah, and I think I sent this out early in December, right after we got it.
Okay, yeah, I think you're right, Peggy. I saw
it's mixed
that
with everything.
And then the scheduling for your show too. So it's just kind of interesting the way it worked out.
Yeah, no, I remember Peggy's email now in December, and it got lost in the holiday shuffle.
Yeah, and we're booked with people presenting.
Right. Okay. All right. Thanks, Danny. I appreciate the answers.
You're welcome. Sure.
And we'll get you any answers you want. You know, if you want a one-on-one with Danny, he's very open to that.
Okay. Thank you.
Does anyone else have any questions of any kind? Because let's see, we did rubs. No fix up. Do you know anything? I mean, Raytheon's in there and Caterpillar, and do you know if they're bringing in more companies? Do you know if the economic department?
They are. You have the Taiwanese semiconductor plant coming in.
Oh.
So that's huge. And then I couldn't name all the companies, but it is, you know, Arizona is a very business friendly market. And that's why, you know, you have the job growth, and then that's why you also have the population growth.
Right. And they go to Tucson because they could get it for less because the land
Yes,
less and the
right,
cost of living
right.
less, and it's a really
Yeah.
good place for them to go.
Mhm.
So Tina,
Hey, thank you for your presentation. It was really good, Danny. So I know that you said you were in California and you went over to Arizona. Are you considering going out, moving into other markets?
Yeah, we're actually in other markets. We have other partnerships in Texas and in Florida. And also we also have deals up in North Carolina. We had one in Louisiana that got sold. We had in California, but I'm out of that. So yeah, we move around a little bit. It just so happens that we have such good relationships in Arizona that every time we go, whether we go to Denver or we go to Washington and we go out and visit deals, and we chase deals out there, we get that phone call and say, hey, we have another deal, we want it. So we end up getting back. I mean, we tried to escape and we just haven't been able to. But yeah, we're open to other markets as well.
it's great. They keep calling you. And
Yeah,
you're
we
always
gotta be
able to
doing
put it
something, right,
together.
Peggy?
Yeah.
Yeah,
I mean, that's being handed on a platter. That's really good platter. That's really a great relationship you've got.
yeah. We've been blessed. We've been blessed and we're lucky, absolutely, for sure.
Oh, do you have another question, Tina?
You
Jonna?
Hey, Danny, this is more of a general question, I think, for Arizona. I think Arizona is a pretty good state for retiring in. Are you seeing older renters than the national average in Tucson and in Arizona?
you know what? I can't say that I see a trend for that. Um, I see all ages basically, and the tenants, we visit our properties at least once a month, the ones that are stabilized. And I can't say that I see one demographic more than the other. It's pretty well rounded.
Okay.
Oh, so you get a little bit of everybody, huh?
Yeah, we do. You do. I mean, it's
That's
definitely cheaper to live out there than California for sure, especially the state tax.
mm-hmm. Uh, that's really good for older people and younger people that they've got that
Mhm.
diversity
Mhm.
and
Yeah,
the wisdom walking around the pool.
yeah.
Yeah, we have fairly low thresholds in Washington and Oregon for estate tax. And so a lot of people, when the first spouse passes away, the remaining spouse heads for Arizona.
Ah, wow.
So
Yeah.
I was just wondering, are they moving? Are they buying homes? Are they going into 55 plus? Are they going to apartments?
Well, the homes have gotten really expensive in Arizona. So they rent. There's a big trend going on in Phoenix. A lot of the buildings that are being built out there are the smaller little homes, either single little homes or double dual duplexes,
Hmm.
built to rent they call them. So they're more spread out versus the old garden style type of buildings. But either way, you go out to Phoenix and you see a lot of tower cranes, a lot of buildings still going up, even though there's building permits have slowed down because of the increase in interest rates. There's still buildings that are coming to market, probably for the next couple of years that will impact the current market, but will still slow down because population growth continues. I think it's going to be upward pressure for rents once again in a couple of years in the Phoenix area.
Okay, thank you.
Okay. Anything else? Because we're right at coming on the top of the hour, which is when everybody seems to normally raise their hands. No, nothing else? Oh my goodness sakes. Do you have
Well,
any other
maybe we answered
comment?
everything.
I'm sorry, say again.
Maybe we answered everything.
It seems like that is so. So that was great. It was a great presentation. We're really happy you came on.
Thank
But
you. Thank you.
we'll see what we can do for you. And if anybody has any interest, let me know. We'll do an introduction, set up a time for you to talk to Danny and go forward like that.
Sounds good.
Fred's back. See what I tell you.
I just thought of another quick question. Danny, how often do you get to Texas?
Not often enough. I do go out there to Houston or Dallas. I have friends out there that are buying, but not often enough. It's just we're busy. We're busy buying deals here. This will be our third one that we put under contract last year, so that's not too bad in the current market conditions. Let's see what happens in this year. We already have our first off-market deal that we're looking at in Phoenix, actually, about a 266 unit building. So just like I said, it's like as the minute we try to step out of Arizona, we get pulled right back in and say, here's a couple of deals. You guys want to look at them? I'm like, okay, yeah, we'll look at them.
Okay. Well, if what part of Arizona are you in? Are you in Phoenix or in Tucson?
Well, I don't live there. I live in California.
Oh, you're still living in California. Okay.
I am paying that weather tax.
Yeah,
Okay.
that's what it's called, all right. Because Fred
Okay.
lives in the Houston area.
Okay, okay.
If
Yep.
you ever are planning to come to Houston, let Peggy know, and maybe we can get a coffee or a bite.
Oh, absolutely. I'd love to. Absolutely. Yeah.
I'd like to meet you and just kind of talk about what's going on.
All right. Yeah. I have my list of people I have to visit in every state that I go to. I always take a
That's
look.
right.
Okay, I'm going there. I got to visit these people.
Okay.
Absolutely.
And next time I'm in California, I'll have you on my list to see there or try
Absolutely.
to
I'm out in Orange County, so let me know.
Okay. Sounds like you're busier than me, so
Hey,
I'll make time.
okay, appreciate it.
Very
great.
good, Fred.
Thank you, everyone, for coming, and thank you, Danny. We look forward to having you come on again, and everyone have a terrific week.